All right, so we have the pleasure of having you for a short Q4 interview with Group CEO and founder Lars Wingefors. First of all, on Q4, how do you summarize the quarter?
No, I think it's been, as usual now, a very eventful quarter with a lot of changes happening. But actual operational performance, I think, is solid. You know, we are making more money, 50% more than last year. We are generating a good cash flow of 500 million, despite a significant negative EBITDA contribution from the divested companies. So from that perspective, I think it's a solid quarter.
Yep. And you also mentioned that you expect a similar adjusted EBIT year on year in the coming year here. What would you say are the key components sort of forming that view?
Yeah, well, looking at the business plan in the year, we see a stable performance within tabletop and mobile. They are making good money today, and they will continue to do so with a strong free cash flow generation. In entertainment and services, which is our distribution business, primarily on the top line, we see a bit less products coming to market this year that will affect the top line. On the profitability on that, we will have a bit less royalty coming in on Middle-earth due to not the same trading card game from Hasbro contributing this year. And on PC console, you know, we have a good solid pipeline this year, obviously driven by Kingdom Come: Deliverance II, which I believe a lot in, and a number of other titles, Killing Floor 3, for example. But looking overall into our pipeline, we have a good number of very sizable big projects that are not ready to ship this financial year, but they will ship years thereafter, and that will obviously drive growth in the future. So that's kind of how we see the year. So similar profitability, but much stronger free cash flow generation.
Yep. And you mentioned the negative impact in the quarter on the cash flow side from the divested assets. Now, obviously, the divestments have closed at the very end of Q4 or now in Q1. How do you see the free cash flow developing in the coming year?
No, free cash flow, I think, will partly be driven by new product releases and the seasonality. So again, we would have a strong cash flow in the end of this calendar year or Q3, driven by the releases of new content and the seasonality of the tabletop business, and partly on mobile, there is also a bit of seasonality. So that's how we see the cash flow coming through.
Yep. And obviously looking beyond this current year that we're now entering, how do you see, given the lower capex now, 4.3 billion run rate capex, how do you see sort of top line growth and earnings growth in the following years in a sort of philosophical or broader sense?
Yeah, but you know, we announced this morning that, you know, we are allocating more and more of our resources, both capital and human resources, to our owned or controlled IPs. Darksiders, Remnant, Tomb Raider, The Lord of the Rings, and many, many others. That will obviously drive growth and profitability the years ahead. So I think that is very important to keep in mind, that we are keeping, obviously, many of the absolute best teams there is in the industry, and many of the most amazing IPs there is, such as the Middle-earth universe.
Yep. And there's been a lot of interest, I would say, in the past month for Star Wars Unlimited, the release from Asmodee. How would you sort of summarize the reception, outlook, impact on Asmodee very briefly?
I think so far it's been an outstanding reception from fans and players to Star Wars Unlimited. So they are out to a very strong start, but building a world of a trading card game is a very long-term play. So keeping in mind there is more sets or products coming to market under the Star Wars Unlimited franchise this year, but also the years ahead. So it's important that this is not a short-term cash grab. It's a long-term build of a entire game or universe for players, and it's important to be respectful that this takes time and you need to deliver quality to the expectations of the players.
And it's clearly been outside of the operations and game releases and so on. It's been an intense period. A lot has happened. First of all, the restructuring program is now finalized. Are you satisfied with the outcome?
In a way, yes, but in another way, it's been hard to separate the group or the companies from a lot of great people. So it's been a rough or difficult period for all of us the past year. But we have to do that in order to build the future for the rest of Embracer and the companies. But yes, we have achieved a number of the targets we set up. CapEx reduction, OpEx reduction. We didn't fully get to the net debt target. We had a very ambitious target by end of March. But in the course of this year, we have significant cash coming in from the divestments we have made, but also from the free cash flow generation that would de-lever the business a lot.
And the future consists of 3 publicly listed entities: Asmodee, Coffee Stain and Friends, and Middle-earth and Friends. When will we learn more about this separation over the course of the year?
Well, you will learn more each quarterly report, but if there is any important news, we will obviously communicate them separately. But at the quarterly report, we'll give the market an update where we are, and hopefully, or we will at one point communicate a specific time plan for each of those separations. But it's important to understand this is a rigorous progress or process with a lot of different people and work streams and things that we don't fully control. For example, the Nasdaq and legal partners, auditing partners. But we are confident in the process. It's tracking according to the current plan, and we are expecting to spin off Asmodee in the course of this financial year, ending March 25, and we're expecting to spin off Coffee Stain and Friends in the course of the calendar year 2025.
Very good. And a tip for listeners is also that there are now pro forma financials on a quarterly basis for the 3 entities as well. So that's worth checking out. Thank you, Lars. Thank you for tuning in. That's it for today.
Thank you, Oscar.